right, are we settled in? How are we feeling this second day? Oh, where's the energy? I know we've gotten a lot of information. I hope you download it into your system and get ready for more. Because next up we have Diana Florescu, Jorge Arenas, Fernando Estrada, Rodrigo Lascurain, I'm hoping I'm saying this correctly. If you can correct me. Moderated by Marianne Springmuhl. The subject is Media Capital, Unleashing the Power of Growth. Marianne Springmuhl is a polyfaceted professional with a focus on SMEs, female leadership, and a balanced approach to professional and personal life. Welcome, Marianne.
Gracias. Thank you.
Jorge Arenas, a seasoned entrepreneur with 16 plus years of experience, leads Publish Group, which owns Guatemala's largest Do&O. Is that correct? He will correct me and he will say it properly right here. Transport Network, serving 200 and plus clients with over 4.5 million daily impressions. Welcome, Jorge Arenas. And do you have your mic? All right. So could you please tell us before we welcome our next guest what's Do's and O's, because I'm incorrect. Do it right there.
Yeah, it's it's digital out of home. So basically, out of home networks, which are media, billboards, and MUPIs and all this, it's going through a revolution, which is getting digitalized, and it's spun into a different category, and that's digital out of home.
And O's?
What do you mean?
Oh,
out of home. So it's digital out of home and out of home. Yeah.
Sorry. Okay, I'm out of myself right now. All right. Now, next up we have Fernando Estrada. 15 plus years of experience in traditional and digital media, marketing, and specializing in region-specific strategies and product within the media industry. Welcome, Fernando.
Thank you. Thank you.
Next up, Rodrigo Lascurain. It's a lot of different names here, so bear with me. It's a seasoned alternative asset investor, professional, and with experience in venture and growth capital, holding significant roles in various firms in the U.S. and Mexico. Welcome, Rodrigo. And I'm gonna I introduced her and she wasn't here, but welcome. So join us on an insightful panel discussing the media's role in driving exponential growth and shaping the future of communication. Explore Media Capital, a venture model that has maximized revenue for brands and media companies in Europe and expanding to LATAM. Thank you.
Gracias. Thank you. So first that we start the panel, I want to make just two announcements. One is the Volcano for Good initiatives that we have. One, we are trying to eradicate Nutrilistro in Guatemala. That is one of the countries with more chronic malnutrition. And Nutrilistro is an amazing product. You can go on the stands of Volcano for Good and ask for it. And also we have an alliance of UNCEPA that we are trying to get to the goal, and we haven't. So please, we want you to donate. And it's an amazing thing that we're doing for the kids in Zacatepeques to give them computers, internet, etc. And the other announcement is I want to thank the three artists that help us make these incredible sculptures that are right now here. Michelle, Marinés, and Fernando. Marinés is more known as Mila. Así que un fuerte aplauso, a big applause to them because we have them here over the crowd. There are three brothers and sisters, and they're amazing artists. So I just wanted to say that. So we're gonna start. Thank you very much for being here. Diana, you are the one that you live in London, so thank you so much. Getting on a 9-hour plane, 2 planes, 15, thank you, you're amazing. So I wanted to start, I wanted to start, if each of you can have an introduction, about 30 seconds, who you are, what you're doing. The people know me. I'm going to start. Marianne Springmuhl. I'm the founder of Volcano Capital. It's a new unit that we have of investment in Volcano Summit. And I come from a family that owns media. We have a newspaper called Nuestro Diario, and also Soy 502, 502. So media runs kind of in my blood, or my father's wants to. He's over there. So I just wanted to say that, and that's why I'm here, because he founded the group 25 years ago, and basically I know a lot about that, because we in dinners always talk about media and this incredible industry. At the same time, transformative times in the industry. So let's get started. Introduce yourself also, the 30 seconds, and then we will hit with the questions.
Okay. Can everyone hear me? Okay, perfect. Buenas tardes, good afternoon. Really a great pleasure to be here. Thank you so much to Publish Group and Volcano Summit for having us. I lead a company called Media for Growth. We are based in London, but our network of investors are from across Europe, US, as well as Latin America. We've started this data platform and a network of investors to help early stage startup raise media capital, which is the topic of today's conversation. It's a new venture model which works brilliantly well for consumer companies that have to reach the mass consumer market. I spent the last 10 years or so in venture, working with early stage investors and venture building studios. And I'm also a partner in an event business called Wolf Summit. We run similar events in Europe. Thank you for having me.
Hi everyone, thanks for being here. I'm Rodrigo Lascurain. I run the corporate VC for Televisa Univision in the US. So we do media for equity investments in the US and Mexico. We started this 3 years ago, and we're very happy with it, and we will continue to do so towards the region. But I'll tell you a little bit after this.
Thank you. Hi. Hola. Buenas tardes a todos. Hi, good afternoon, everyone. My name is Fernando Estrada, and it's an honor to be here as part of this discussion panel. I've devoted my entire almost 20-year career to traditional and digital media. Throughout these years, I've learned a lot, and I witnessed the evolution of media in Guatemala and in the Central American region. It's a pleasure to be here today. Thank you very much for the invitation.
Hi, everybody. I'm Jorge Arenas, and I started working in media around 20 years ago. I started working in traditional media, in TV channels and radio stations. And around 17 years ago, I founded the first digital out-of-home company in Central America. So we started basically putting up big LED screens in the middle of the street. And then we ventured into transport media. So we have the biggest network of transport media in the country. So we have screens inside the buses and posters in the backside of the buses. And right now we have the largest digital out-of-home network in Guatemala. So we reach basically more than 4 million viewer impressions every single day. So through that experience, I've been able to generate really good relationships with different media owners, and we're constantly exchanging media space. So through that initiative, we started to dabble in Media for Growth, and we met Diana. So this is really exciting for us because it's sort of like the first step of introducing this model in the country. So thank you very much, and I'm really honored to be here.
Thank you. So let's start with Diana. Ladies first, always. Tell us a little bit about the model. I want also to explain a little bit of the difference in the names. Media capital, media equity, media for growth. You know, it's three things that are talking and take us in a journey of the model. And
Sure. Can everyone still? Yeah, no, it's working fine. I think we're complicating it for no reason. All the three terminologies essentially mean the same thing. Media capital is probably more prevalent. Media for equity is very transactional. So in media for growth, I'm using that term because it's not just a simple transaction of equity for the media space. You'll see when you start conversations with different media companies, they could work and partner with you on different forms and shapes. It could be revenue-based financing. It could be a matching model where they would match the investment that you spend with them. So personally, and a lot of the investors that I work with, they use media capital when they refer to this type of investment, that's you have venture capital. And I refer to the whole realm of investments as media for growth. I think for a lot of founders in the room, what you should probably, how you should think about media for equity is that it's just another form of corporate venturing, right? So companies partner with startups in a lot of different ways. They do M&A, they do direct investments, corporate venture capital funds, they've been booming for the last 10, 15 years. They may do pilot programs where there's a strategic investment that could potentially end up using your services inside the company. And then they do media for equity. And that's a form of diversifying revenue for that media company, right? In the end, there's two objectives. One, they want to have financial returns for the group. Two, could be strategic, so that they not only invest, but they could potentially end up partnering with you and integrating the products and services that you provide inside the company. Obviously, I can go on forever, but I think what's really important, we can talk about the benefits of the model and provide some real examples of companies that have raised. It's a fresh type of investment. I think everyone that is here in the room that has been trying to fundraise for the last maybe 24 months or so, you may have experienced a slowdown in fundraising, and there's been a slowdown in deploying capital. And I think if you are a company that needs that brand amplification that also Jorge was explaining, what do you actually get, right? You get eyeballs, you get a lot of reach. These media companies could provide reach into millions of households. This is a fresh model that I would encourage more of you to look at.
yeah, thank you. And it's super interesting, and we were talking about it, that the cost of acquisition of a client for the startups, it could be gigantic, and the percentage of marketing in that spend, it's a lot. So this is a model that can benefit, it's a benefit win-win side that everyone wins. And with that, Rodrigo, tell us a little bit about your experience in Televisa and your experience in the fund that is called Unión Bravo. Tell us about the size of the fund, the investments that you have made, the sizes of the tickets. Get us a little bit around on that.
Yeah, sure. So Unión Bravo, it's the official name of this corporate VC fund for Televisa Univision. It's a separate vehicle. So we started this in 2020 out of Mexico, doing like opportunistic deals and trying to test the waters. But more and more, as it gained traction and we were successful with the companies that we invested in, we decided to officially separate it from the Televisa balance sheet and create the proper infrastructure, hire people that were specifically working for the fund. And as of today, so three and a half years later, we have north of 24 investments. We're looking into being closer to 30 by the end of the year. And then Televisa merged with Univision in early 2021. So it's now officially Televisa Univision. It's a one entity with operations in the US and Mexico. We are thankful to be the largest market share in both countries through our assets. So it was going so well that we decided to do that in the US as well, going into our check size and things like that. So we've deployed around 300 million of media in these 24 companies or so. Our average ticket size is around $15 million. We've done the smallest deal around 5 million, the largest one 35 million. And we are very flexible in how we structure the deal. Is more if we see value in the company and specifically value for us to help them through our assets, through our platforms where we have TV, local TV, national TV, radio, podcast. We launched the streaming platform to target not only US and Mexico, but the whole LATAM or Spanish-speaking world. So we can really reach the consumer, Spanish-speaking consumer, wherever they are now. And as Diana was saying, I mean, it's people forget about these mass media channels because they think Meta or paid for clicks or YouTube. But at the end of the day, I mean, 2 years ago, Meta was advertising itself in the Super Bowl. So TV works and mass media works. And it's a different strategy. It's a different way to raise funds, but it has worked very, very well. And I think you'll hear it more and more in regions. And I'm glad Jorge in Guatemala is starting to do it. Yeah, that's a little bit of the model.
And can you tell us a little bit about the startups, like some famous startups that we have heard that you invested in? Unicorns? Do you have unicorns in Union Bravo? Yes, no?
Yeah, we do have unicorns. Happily, we have a handful. But also a unicorn, I mean, until you see the cash return, it's a term that who knows what's going to happen. But going into names, we're lucky to be in Rappi, we're lucky to be in Clip, in Quesky, in Confio, Quinto Andar. Another more in the US side, Fetch Rewards, it's a loyalty-based application. Notco, if you're into like plant-based company from Chile. So we're, in that sense, we're industry agnostic. We can do anything that has either like a direct-to-consumer approach or B2B2C. So anything that you can think that could advertise in TV or radio, we would look into. So we're going into different verticals and diversifying our portfolio as well. So that has been the journey.
Thank you. And Jorge, tell us a little bit about what you have been doing with this model in Guatemala, please. I would like you to tell.
Can you hear me? Yeah. So right now what we're doing, we're working on two different fronts. The first front is getting together all the media companies, right? Because at the end, the model works better when you have a good media mix that caters to the company. So that doesn't necessarily mean just one company, right? So in my case, I run a out-of-home company, which is a great medium to generate top of mind and to just put brand awareness out there. But if you complement that with a radio, with television, it becomes way more powerful. So right now, I'm working with media companies. I'm working with Prensa Libre. I'm working with I've worked with your father for a long time, and I think he's one of the pioneers of this model, empirically, but he's one of the pioneers in this of this model here in Guatemala. So we're kind of like getting to a point to understand how to push the model forward. Because again, media companies here are highly conservative, right? So they're used to selling just ad space, and the whole infrastructure of the company works around selling ad space. So when you put a model like this on the table, at first it generates a little bit of resistance, but then I think it's quite interesting for a media company because at the end, it's a different revenue channel, and you don't allocate all your media space. So you always have available space. So if you use it to push forward startups or consolidated company or private equity, it becomes really interesting. The second front that we're working on is to getting startups and companies to understand the model, which is a little bit more difficult because in Guatemala, people are really conservative, right? So when you talk about handing over equity for media, there's a resistance, right? So what we came up with was this this contest that we did with Prensa Libre, which is called Entre Jaguares, which basically we're giving away the media space, right? So we're doing a Shark Tank sort of a program, and we're giving away 2 million quetzales to the winner. And we hope that with that, we're going to have the case study to push the model forward. And on behalf of our venture fund on Publish, we are working 3 different projects. One is a television brand. The other one is a chicken industrial chicken producer, right? And the third one, which is right here in the stage, is a mental health service with Tu Consejería, which is really interesting also because at the end, it's a model that's it's looking to do some good.
Thank you. Fernando, tell us a little bit with the Entre Jaguares and all this that you are doing, how Prensa Libre has been benefit, how you see the startups, have you seen some sectors that you are more interested, and tell us a little bit about that.
Yeah. First of all, before answering that question, I would like to give a really interesting fact of Guatemala. I just read a few weeks ago a study from the Francisco Marroquín University. Guatemala is in the top 5 countries in the world with more entrepreneurships and startups. Over 2.7 million persons manage their own business in an 18 million population country. The main issue... yeah. It's all not good news. The bad news or the challenge is that they start their business with a really low capital just for acquiring the products and reselling them, but they don't have the capacity or having the capital for the customer acquisition cost. The customer acquisition cost, almost 40% of that cost, it's in publicity. So that's why this model is really great, right? Because we have made some exercises here in Guatemala, not in the media for equity model, but in the media for growth. We're searching for equity, right? Like a commission of the product sales. So we are getting that problem to those persons, right? You don't have to put all your media. We have the newspaper, we have media assets, we have cable channels for Central America, we have software as a service. So as a group, we have a lot of services that we can put up front, and then they don't have to get that capital for the customer acquisition cost. In the last 5 years, we have made some exercises in different industries, for insurance companies to e-commerce. That give us like the top 3 industries that we consider could work more in Guatemala or more easily or with less challenge. Retail, since from e-commerce to clothing to supermarkets, healthcare and pharmaceutical products, that's a really good one too, and food and beverages, restaurants, snacks, flavored soda. We think with our experience that could work more here in Guatemala, and we have in partnership with Jorge and Publish Group for the project Entre Jaguares. We have reached millions of people with this project. We have worked with over 400 entrepreneurs today, and next week is going to start the show, the TV show. It's like a Shark Tank but better.
We have some Jaguares in the audience, no? Yeah, 2 Jaguares, 3. Who? Hey, there are 2 Jaguares,
you're gonna see them in TV next week, prime time in Univision. So the difference between a Shark Tank and Entre Jaguares is that they don't have to have like capital investors there. So I thought that we were giving 1 million, George, and you say 2 million. It's a surprise. Oh. I didn't know that.
Another million just in front of you.
That's a huge surprise. So better for them. So that's what
Thank
we're
you.
working.
Thank you. And Diana and Rodrigo, and I open it to the panel because of the time also. You that have more experience and you have lived the deployments and the execution about a fund, about the company that you have, tell us a little bit about the challenges that you have seen in, so let's be real, what are the challenges of the model and also the opportunities and the benefits of this kind of model?
I think I'm going to take the question from a founder's perspective, and maybe I'll let Rodrigo talk from his media
Investor?
lens as well. Yeah. So I think with founders, usually we get a lot of pushbacks, as Jorge said, because there's a lack of kind of education, or there's a lot of misconceptions about the traditional media channels. To be honest, if you are going to advertise on TV and you expect to see an immediate impact on your bottom line, then it's not going to happen, right? So I think being completely straight up front, managing expectations, that's really important. I think what TV does, or a platform like radio or anything above the line media, it has a multiplier effect. So you'll probably hear from any investor, be it Televisa or here in Guatemala, they will never ask you to stop spending on digital channels. In fact, they will probably ask you to keep spending on digital channels, because what this model does, you will reduce your cost per acquisition. You'll be able to get a lot of the traffic that is coming through these media channels, and you can, retarget them with your amplification channel. So I think managing expectations is important. Understanding how to use these channels and what for. A lot of companies have used it successfully to raise brand awareness. And you should remember that your future investors and your future distribution partners are watching TV as well, or they can see you on the street, right, in the digital billboards. We've worked with a company in the UK, a supplement business. They've raised from corporate venture capital funds as part of the same round. In fact, a lot of companies do raise cash alongside media. And off the back of that investment they've done with ITV, which is the largest commercial broadcaster in the UK, they managed to have presence in a shop called Hall & Barrett, 150 stores across the UK. We're talking about a 2.5 million credit value that they received from that distribution partner. So I think the challenge is talking about it, going through case studies of companies that have raised this capital in the past. We are launching a data platform next month where you'll find detailed information on over 600 brands that have raised media capital in the last 20 years. And then the last thing I just want to finish off with, we do get a lot of pushbacks from investors, especially cash investors. And I think the question we always get asked is, why would I give away my equity for media when I can just go and raise cash and spend that cash on buying the media? And obviously, I think there's many reasons, but what's really important to remember is that a lot of the media that you receive from partners, it tends to be a preferential rate. It tends to be a startup-friendly pricing right there, because obviously they invest in you. They have vested interest. But it's not just a mere transaction. When you do a campaign like TV, when you do a campaign, for example, with Publish Group in Guatemala, there's so much going into the creative aspect of it, the messaging, all this cost that sometimes they get subsidized by the media partners. And then all these media partners as well have other connections with investors in the network. So it's not just a simple transaction. It comes with a lot of benefits that you might not be able to get if you're just spending directly in cash.
Thank you. Rodrigo?
Yeah, so to add a little bit to Diana, starting with the challenges, I think it's, first of all, it's explaining the model. I mean, this has been for a couple of decades in the Nordics and in Europe, but in this part of the world, it's fairly new. So, I mean, starting with how this works, how are you going to come in? Are you going to participate along with other investors? How are you going to develop like a media plan? Many times there's also some models that give away like unused inventory, where there's also like us, that we create a media plan with you together. So that's a little bit of the challenge, explaining the model. Why shouldn't we pay you cash? And I think the opportunity there and the value that we tell them all the time is that, I mean, first of all, we're gonna be in the same boat. We're gonna participate with you. You're bringing a strategic investor. We like to say that we effectively become your CMO. So our interests are completely aligned. We're gonna give you the best inventory that we have. We're gonna create this media plan specifically to your company, to reach your objectives, to reach your goals. And we're gonna be iterating in it and make sure that if something not working, we're gonna change it. If you wanna go into another direction or into another region within those countries or wherever we're present, we're gonna do it. And I think the opportunity is that this really just started in this region. So I think we're gonna see more and more this kind of structure. More and more groups will come into it. Maybe they'll partner together to create a holistic approach towards the country or towards the region. So I think there's a lot of opportunity. You will hear it more and more. And hopefully these unicorns turns into exits.
Yeah.
Because that is also like tremendous for everyone. You see how you help them and how, I mean, people saw the returns and they talked about it, and that's how the ecosystems keep it growing and growing.
Yeah, and I love the part, we're out of time, but I just want to say something, and I want to give you some seconds also. I love the part that you mentioned that they have to look as a CMO, you know, and that we're going to give the best inventory, not the trash inventory, and etc. That's a paradigm that we have to break because this is new in this side of the world. And just, Jorge, in 10 seconds, tell us if there are startups here and companies that can be a good fit, what they can expect for a region as Central America and Guatemala for this media growth and media for equity.
Yeah, I mean, as Diana and Rodrigo were saying, this is sort of just beginning in the region. So I think that it's really important for startups or companies in general, because this isn't a model just for startups. It can also work for consolidated companies that have 10, 15 years operating, that have a good business model, that have products already in retail spaces, but they're looking to scale. They're looking to get more market share. They're looking to grow. So what I would say to all these companies is to reach out, right? So at the end, Guatemala is a small country, right? So we need to help each other out. You don't have the massive markets that they have in the States and in Mexico. So we got to figure out a way to communicate, to reach out, and to be able to give this tool, this amazing tool, to companies and startups in Guatemala, so they can use it and benefit from it.
And collaboration as a media. You know, we are 3 groups here of media in Guatemala and Central America, and it's part of the collaboration, the mindset of Volcano. So I'm so excited that this was the panel. When they told me that they wanted to do a panel with this, I'm like, my father has been told us about this model, and you said it like 10 years ago maybe, and he has tried to do it. So thank you very much. It was